So what if the most important financial asset of our lifetime is something that most people still think is a scam? My name is Justin Campbell. I'm a licensed financial advisor here in Salem, Oregon. I hold the Certified Financial Planner designation, as you can see behind me here. And I have spent countless hours over the last year and a half educating and investing my clients based off of what we're going to be talking about today. So in this video, I'm going to show you what money really is, how centralized governments have been quietly stealing your wealth, and why Bitcoin may be the answer to protecting your hard work, protecting your freedom, and bringing the world closer together than it's ever been before. So let's get started. So before we talk about Bitcoin, we first have to talk about what is money. In order to do that, we need to understand the functions of money. And really, there's two main functions. So the first is a medium of exchange, which essentially means, can I universally understand the cost and be able to purchase goods, services, and labor? Now the second piece, which is vitally important, is it a good store of value? So if I take my money today and I bury it in my mattress, I come back 10 years later, take that money out and try and buy something, can I buy the same amount of stuff as I could before? So now that we understand the two important attributes of money, we can look at the forms of money that we used through history. So we first started with the barter system. This is my cow here. Obviously, the issue was that the barter system was not universal. Everybody had different stuff that they were trying to trade back and forth, so there was never a universal understanding of how much something cost. Then we eventually moved to things that were more replicatable, more universal, like seashells, for example. The problem with this was that they were too easy to create. So people could just go out to a different ocean, they go to the beaches, they find their own seashells, they bring them to this new market, they dump their seashells in, that dilutes the currency and the currency crashes. Eventually we moved to more of your metal coins. Now these solve the issue of the replication as they were minted by a centralized government, so the Roman Empire, for example. The issue with this, though, is that they were very hard to carry around, they were hard to store, and this led to people trying to break into vaults and war over getting access to money. Eventually, we've gotten to now what we are all used to, which is the paper dollars, and this has honestly been a great medium of exchange. It's very universal, we understand how much things cost, but the question is it a good store of value? The answer, which you might have guessed, is no. So over the last 100 years, the US dollar, which is the best currency in the world, has lost over 90% of its purchasing power. And that doesn't matter if you're right or left, what president was in power, we nonstop have just continued to dilute the value. And a lot of that comes from the centralization of power. There's always somebody in place that has their finger on the red button, that when the time comes or there's a war going on or whatever the reason is, they have the ability to print more money. And so that's what we've seen happen. So this is a chart of what's called the M2 money supply, which is essentially just all of the money that is circulating in the US ecosystem since 1970. And so this line is showing you that the money supply has continually grown, and now since 2020, which you can see kind of starts over here, and we have this big run, was the response to COVID. Because of that, at the same time that we printed tons of dollars, we also shut down the entire global supply chain. So the amount of goods and services that were circulating were much limited in terms of their supply, and dollars were increased massively. So people had tons of money to spend, but there wasn't very much stuff to be able to actually go out and purchase, meaning that we had to compete. And when we have to compete for a limited number of goods, that's where you see inflation go up like crazy. If everybody remembers, in the housing market was a great example. You saw prices just doubling. People were throwing $50,000 over asking price and were getting beat out. And you had just this mad dash to get into these assets. And so risk assets as a whole went up like crazy. And now even years later, we look and see that grocery prices have doubled, and many goods that we would have purchased for much, much cheaper back in 2019 are now very, very expensive. And so in response to that inflation, what we did was in 2022, you can kind of see the peak up here, we decided to increase interest rates at a rate that we had never seen before, because the Fed finally realized that they'd run the economy too hot from the printing. And so in order to take money out of the system, you make it more difficult to get money by raising interest rates. And so the issue with this is that you can only take out so much money before you cause a recession. And with the printing of money, since it was so manipulated, most of the money got given to all the kind of top 1%ers, and the rest of people just were left with inflation. And so inevitably over the coming years, we have had to continue to trend that line right back up again. And now we're at all-time highs in the money supply. And even with this big, beautiful bill that was just passed, we have now given room for another $5 trillion of debt to be added. Therefore, the money supply will continue upward. So a big question this raises is, what is the money printing backed by? And the answer to that is debt. So we are currently at $37 trillion of total US debt in this country, a third of which has been created since COVID, so just in the last 5 years. To see that a little bit better visually is that's $108,000 of debt per citizen. And so if you were someone that actually had that, so let's assume we split that out and you did each have $108,000 of debt, let's say a 5% interest rate, you'd have to be paying an additional $450 a month to just pay the interest on that $108,000. And that's not even to pay down the $108,000. And then imagine the next year, it's now not 108, it's $111,000 based on this $2 trillion of additional expenditures. So then instead now you're paying $450, you're paying $464 every month just to pay on the interest, and so on and so forth. And so you can see the spiral that we're in, where the debt continues to balloon, the interest payments continue to balloon, and at some point the interest payments on our debt will eat up all of the tax revenue that we currently generate. Right now, the interest is larger than our military spending budget each year. And if we get to that point, the currency is going to crash, interest rates will spike, and we'll most likely see the next fall of the Roman Empire. Now, many people say to me, well, Justin, what about gold? Gold is a great hedge against inflation. It's been historically a really good store of value. It's pretty scarce. There's only a limited number of gold nuggets on the earth. So why can't we use that? And honestly, it's a really great question. And for thousands and thousands of years, gold has been the best form of money that we could come up with. The issue, once again, is that it is very hard to store, it is very hard to transport, and can you imagine going to the grocery store and trying to buy a handful of apples and saying, here's my gold brick, and try to make this the amount that I need for my purchase? Now, what if there was an asset that had all the great attributes of gold that we just discussed, but it was weightless, it could be teleported anywhere in the world, it could be divisible into 100 million different tiny pieces, and it couldn't be controlled by any sort of centralized power or government? So it actually turns out that that asset has existed for the last 15 years, and it goes by the name of Bitcoin. So Bitcoin is the first fully digital currency in existence. It is a scarce asset in its supply. It is decentralized and it is global. It is secure and it is permissionless, meaning that you don't have to talk with any sort of centralized power before transacting business. It was created by someone called Satoshi Nakamoto, or at least that was his pen name. We actually have no idea who Satoshi actually was. We don't know if it was just an individual person or a group of people, but their idea was coming off the 2008 financial crisis. They saw that banks were all bailed out for their bad financial decisions, nobody went to prison, and all of the common people had to deal with all of the repercussions that came along with that, and all of the recession, the housing crisis, etc. And so he looked at the money and said, how can we do this differently? How can we create this so that it can't be manipulated by these people? It can grow in value over time for its citizens and its holders, and it will be able to stay outside the purview of whatever corrupt establishment is in power at the given time. So the first way he attempted to solve this was by creating a fixed supply of Bitcoin. So there will only be 21 million Bitcoin that will ever be in existence. That is fixed. It is the first financial asset in history that is totally fixed. So in order to see that visually, you can look at this chart here, but only 0.27% of the current global population can own one Bitcoin. So just those two tiny little people down there, compared to the entirety of the world, can actually get their hands on that much Bitcoin. Now, the second piece of the scarcity of Bitcoin is in its distribution. So Satoshi didn't want all of the 21 million Bitcoin to just be distributed into the system right at the very beginning. He wanted it to be on a schedule. And with that schedule, the idea was, because everything he was trying to do was to make it so that Bitcoin's value went up over time, he said, this is going to distribute daily at a certain rate, and every 4 years, that rate is going to be cut in half. And so what's happened is by the time we are now in today's world, about 95% of its total supply is in circulation, and will be at about 99% of the total supply in 10 years. But after that period, the last 1% of that total supply of Bitcoin will take 100 years to be distributed out into the ecosystem. Now, if we look on the opposite side and we look at how we have done currencies in the past and how normal currencies function, they don't have a schedule. They are unlimited at the discretion of the Fed. And so if you're somebody, you're an institution, and you're trying to say, I'm going to put my money into something that I want to hold value over the long term, you have no trust in the current fiat currencies because you don't know what they're going to do. You don't know what circumstances are going to happen. You don't know when they're going to print $6 trillion because of COVID. But with Bitcoin, you can look at it and go, I know exactly how the distribution of this is going to go, and I know the exact number of Bitcoin that will ever exist. So now we're going to talk about the blockchain. So if you're someone that wants to transact in Bitcoin, the first thing that you're going to need is a Bitcoin address. Now, these addresses are totally unique and they are public information. Now, that is not to say that you are not anonymous. These addresses do not have any sort of connection with your personal identity, but when you do a transaction with someone, so let's say here with the highlighted information, person A sends 3 Bitcoin to person B, that transaction and your public address is going to be shown to the entire world forever. So 100 years from now, you could look back at that date and time and see that transaction on the blockchain. Now, a reasonable question is, how are these transactions verified? Who is watching over the network and that ledger? And the answer to that is 70,000 different computers across the world. And the reason for that is that all of these computers are competing to verify transactions so that they can, 1, get a piece of the transaction cost in Bitcoin, and 2, so they can get their hands on the unminted Bitcoin, so the piece of the 21 million Bitcoin that has not been distributed yet. And because there is so much competition going on, they are incentivized to use as much computing power as possible, because the higher level of computational energy you have, the higher chance that you actually earn the Bitcoin is. And so every single computer that comes online in the network makes the network stronger. So over a 15-year period, the Bitcoin network has never been hacked. And at this point, if you wanted to actually control the blockchain, you wanted to control the messages of the transactions that were happening, you would have to hijack the cumulative computational power of the entire global internet to do so, which is just incredibly unreasonable and really pretty impossible at this point. So now let's talk about who actually owns the Bitcoin. So according to this chart, which take it with a grain of salt as this is always fluctuating, 57% of the total supply of Bitcoin is owned by individuals. Now, it's about 330 million people across the globe that currently own Bitcoin. And this was originally the entire base that owned it. At the beginning of Bitcoin, before it was on the map, it was just a bunch of these nerds that had learned about this magic internet money that they could kind of hold and learn and play with. And the concept was great. And some people believed that this was going to be the revolution and the new money that was going to kind of carry us forward in the 22nd century. Turns out they might be correct. But what's really important here too is 17.6% of that, which is about 3.7 million Bitcoin, have been lost because people forgot passwords. You know, they set up a wallet and they own 10,000 Bitcoin. The currency crashed, they forgot about it. 10 years later, all of a sudden they have hundreds of millions of dollars in that wallet, but they can't remember their password. And so that 3.7 million Bitcoin is just never going to be accessed again and just adds to scarcity of the asset. Now, another important wallet to take a look at is Satoshi's wallet. He has 5.2% of the total supply of Bitcoin that he holds in a single wallet that has been dormant for 10 plus years. So now, is it a risk that he could go and turn around and sell it for billions of dollars? Yes. Would that put downward pressure on the price of Bitcoin? Absolutely. But the beautiful thing about the decentralization is that the owner of the asset himself has only 5% of the supply, and that is the largest single entity that owns Bitcoin. Now, something that has just been added in the last year and a half is the companies, ETFs, and governments that you can see. And this is basically a year and a half ago, the SEC, so the Securities and Exchange Commission, the US, that decides on what we allow as far as financial assets goes, allowed for entities really to start accumulating this. And so now they have become a material kind of piece of the Bitcoin network, and they are hungry for Bitcoin. They are trying to hold it for the long term, and they understand that there's a scarce supply. So a ton of these institutions, and it's growing every day, are starting to raise billions and billions and billions of dollars to purchase Bitcoin and to try to get as big of a piece of the pie as possible. Now you can see there 6.6 not mined. It's closer to 5% now that is still not mined, and that is obviously dropping every day as miners are getting new Bitcoin and it's being distributed into the system. And one of the big questions that I get asked, especially as the price of Bitcoin has continued to rise, is there still very much room? Are we close to the top? Am I going to have to be worried about buying this and seeing a big crash? And a good way to understand that is looking at the Bitcoin versus internet adoption. So if you overlay, Bitcoin's timeline with the timeline of the internet and how people adopted a new technology, you notice that they're actually quite similar. And something that you can see is it takes time for people to find trust in a very big disruptive technology. And so what you can actually see here is that Bitcoin has been growing as far as its adoption a little bit faster than the internet did back in the day. And so up at 2025 here, we're essentially in the very early 2000s as far as the internet adoption went. At that time, there were still articles being put out saying, is the internet just a fad that's going to go away? What is this internet? We don't really understand it. And now looking back, another 25 years later, it's incredibly integral to everything that we've done. We've seen, obviously the internet was the most disruptive technology that I think the human race has ever experienced. And so at some point, the internet hit kind of what you call a parabolic curve, where enough people started to gain trust. Some of your people that are late adopters begin to finally transition to understanding it and using it and integrating it into their lives. Infrastructure begins to be built around it, and we're getting to that very same place right now with Bitcoin. Governments, banks, institutions are just starting to get into the game of Bitcoin. And this is something that takes decades to fully build out. But we're seeing the beginnings of this mass adoption where it is being established as a asset class along with all of normal traditional assets that we're used to seeing. Another great way to see this visually is to understand the total amount of assets that are in the world right now. So there's about $900 trillion of wealth stored in traditional physical and financial assets. And that's things like your actual money, your currencies, equities, bonds, real estate, cars, art, gold. But gold's what's really important to look at here. It's currently at a $22 trillion market cap, whereas Bitcoin is only at 2. And so if Bitcoin is what it says it is, and is actually the best of both worlds between fiat currencies and gold as far as the store of value goes, then Bitcoin really should continue to trend towards gold's total market cap over time as adoption continues, as education grows, as infrastructure is built around it. And so if we get to that point over the coming decades to where Bitcoin gets to the size of gold, then Bitcoin will be worth over $1 million per coin. Now, something we also have to take into account is that what these assets are based off of is fiat currencies that are continually and perpetually forever inflating and diluting, which means you could get something that ends up kind of like this. So instead of $900 trillion of global assets, we're at $4,000 trillion of global assets. And if we assume that Bitcoin continues on its adoption curve like the internet, then we could see something like this. And with its fixed supply, if you get an asset that's $280 trillion, that means that Bitcoin would become worth tens of millions of dollars per coin. It's currently at about 100 grand per coin. So hopefully this information was really helpful. Hopefully this gave you an idea of what the concept of Bitcoin is, why you're hearing it on the news all the time, and what the trajectory might look like over the next 20 plus years as this continues to get adopted. I plan on doing more videos that will kind of continue to do a little more nuanced pieces of Bitcoin, but I wanted to do sort of a long video that would just talk about the general ideas, the concepts, and be able to give you a good baseline on understanding what this new asset class looks like. If you would like to have a financial advisor that is going to be on the forefront of these technologies, is going to spend time with you, have a relationship with you, help you build wealth and preserve your wealth over the course of the rest of your life and hopefully generationally as well, please check out our website, give us a call. Thank you.